Stock Play of the Day is an educational program. Any statements made by Ally Invest employees are not intended to be or should be considered investment advice, a recommendation to buy, sell, or hold a security, or a recommendation to adopt an investment strategy.
Hello and welcome to the Stock Play of the Day 100th episode. Today we're going to look at some of the most popular episodes out of the 100, and we're going to open it up for listener questions. And you can tell us, should we have passed or should we have played? Hello, I'm Brian Overby, the Senior Options Analyst at Ally Invest.
And I'm Lindsey Belt, Chief Markets and Money Strategist here at Ally.
All right, Lindsey. Well, it wouldn't be a stock play of the day if we didn't discuss the markets a little bit. And we know that there is a lot going on. So we're going to start with a little discussion about the markets. We'll go through a list of the most watched episodes of the 100 episodes of the stock play of the day. We're going to open it up for listener questions. So make sure you got that chat box up and ready to rock and roll. And with that said, I'll pass it over to Lindsey. What's going on in the markets?
Yeah, let's talk about the markets. But like Brian said, we're going to take your questions at the end or even throughout. So make sure you write them in there. It's all about you today, guys. All right, we've got a chart here of the S&P 500. It's been choppy, really volatile trading for several weeks. Really, if you think about it, since the beginning of the year. The biggest weight on the index really has been this geopolitical risk because of the conflict between Russia and the Ukraine. And what we're learning is things are starting to intensify. Your chart there.
My chart just went away. That's all right.
We're working real time here, right? So
well, the 100th episode, we'll get the bugs out by 200.
Yes, I think so. But so the conflict between Russia and the Ukraine, it seems to be intensifying. It seems the nuclear option may be on the table with Russia. It seems that Russia is starting to attack civilians more. It's a very, very dire situation. It's something that none of us have ever really lived through. You can look back at history when it comes to geopolitical risk, and you'll find out that oftentimes the market can shake these things off a lot quicker than the conflict can be resolved. And it feels like as if the market oftentimes has no emotion around it, but when there are very real negative impacts for the people and places that are involved. So, our hearts go out to the folks that are on the ground and have family and friends that are, dealing with this situation right now. But as the market, when it comes to the market, we're looking at the S&P 500 right here. The geopolitical risk is really weighing on the market, and we're all about managing risk, but the volatility really started at the beginning of the year, and that was because of some of the underlying concerns or the wall of worry that the investors had been building into the end of the year and beginning of this year. And those are related to the Fed, what they're going to do with interest rates, how inflation is going to impact their decision and how quickly they move. And now we have this conflict that seemingly is going to also have an impact on inflation. We're seeing inflation expectations move higher, which is not a good thing because I think a lot of people expected inflation to be peaking here in the first quarter. This makes it seem like that thing with oil prices spiking to highs not seen since 2014, with commodity prices like grains and wheats rising pretty significantly. It seems like the impact of inflation is going to be sticking around for a little bit longer. And what's worrisome about that is inflation can become a self-fulfilling prophecy. So it really comes down to the consumer. They had been, Brian, we actually did a survey on inflation, and the consumer had been, they've been sanguine about what's happening with inflation. They expect inflation to continue to rise over the next 12 months, but they expect it to hover around the 5% mark a year from today, which is less than what we saw the recent CPI report. So that's, in a sense, a good thing because that means they don't think inflation is going to stay at current levels, which means they're not going to panic and go out and buy a whole bunch of goods to stockpile now, which leads to higher inflation. And so it's things like that we have to be watching. And we have the Fed move next week. That's going to create volatility in the market. And then don't forget that while we're going to watch the Fed as they navigate this new landscape with geopolitical issues on one side, inflation on the other side, and their need to begin to raise rates, they're going to be navigating that all the way into the fall when we hit the midterm elections. And it can be a rocky road in a normal year for in that type of environment.
Right. Last year, I think the markets were almost easier to talk about a specific stock. There was a lot of the ducks were in the row. The 200-day, the SPX really didn't even have hardly any pullbacks whatsoever.
Yeah, it was a good year.
Episodes, right. So now I'm going to talk just a little bit about the VIX. And I'm going to actually, I pulled up the VIX chart, and that's one of the reasons why I wanted to get the chart back up. And right now we see the VIX actually around 32%, Lindsey. And what happened on one of the stock plays of the day before Russia had invaded, I saw that the VIX was trading right around the 29, 28 level. And I was very surprised that we were actually at that level, considering that the odds of Russia with all their troops on the border of Ukraine actually going into Ukraine and attacking were very high. So I was very surprised to see the VIX index actually trade at that level. And if we see that, that's all, and I'm going to highlight it here with my cursor. Right in this range was just prior to that, and then we had the big downturn the next day. Before we knew it, the VIX ran up to 30% or almost 40%, which doesn't get up to 40% that often. Since the pandemic, we've only touched that spot about 5 times, where we've actually gone up to the 40% level on the VIX and not beyond. Now, crazy day in the marketplace. The very next day, we saw the markets, the SPX just in the NASDAQ in general had a really crazy day in that it went down 3% and ended up above 3%. So a positive day for the marketplace. So the VIX right now spiking to 32% kind of shows that the Russian invasion is still going on. And we also saw Putin come out this week and say that they're going to put their nuclear arsenal on high alert.
Right, and the VIX at that high of a level that's like an extreme level for the VIX. So there is a lot of angst in the market when you see it get to that point.
And I agree. And the fact that before the invasion, we were around 28, 29. Now we see it spike up to 32%. So there's a little bit more angst in the marketplace, and the Fed probably has a little something to do with it. They're going to be announcing next week. Okay, so that's enough grim for the 100th episode. Let's get into some of the more popular episodes overall. So we went out and we made a list of the top 100 episodes, or the top 5 episodes as far as listeners watching and interacting with the actual video. So I kind of want to just share that list with you. It's kind of fun. I mean, the stock play of the day is all about the listeners, all about the chat box, all about the fact that we can interact with everybody every Tuesday at noon Eastern time.
Yeah, we're here, Brian primarily is here to educate you and help you learn about options and the market in general.
All right, and welcome back too, by the way.
Thanks.
It's so great that you were able to pop in for the 100th episode. So episode number 1 was... the most popular, I should say, was episode number 72, another bite at Apple's earnings with Skyworks options. And then the next most popular was episode 81, trading an electric rally in Ford. That was one of my favorites, actually. And then we have, this one's just a fun title overall, episode 86, Moderna's shot at a reversal, pardon the pun. And then we finished up with episode 83, Electric Vehicle Bulls Rev Tesla's engine. And then lastly, to round out the top 5 was episode 91, Year-End Option Strategies on Apple. All right, so what are your thoughts on some of those most popular, most watched episodes of the Stock Play of the Day?
Well, I mean, I feel like there's definitely a trend going on here, right? We've got you guys, our viewers, must really enjoy tech. You love Apple, anything to do with Apple, right? And then electric vehicles. And you know what, Brian? That also aligns with what we see in trading activity for our customers on the Ally Invest website, too. There's a lot of Apple, there's a lot of Tesla. EVs have been, up and down, exciting, especially the newer ones over the last several years. But I really enjoy the electric rally in Ford too, because I feel like, in a sense, we're a little ahead of the market on really understanding how big this was going to be for for the old school automakers.
Right, and you like to see the old school automakers. You know, Ford, a lot of people didn't even really, and this didn't get emphasized a lot, but you know, Ford came out and made ventilators during the pandemic. They actually changed over one of their facilities to be able to try to help out during those times. And you just like to see a company like that that's been around so long actually dip their toe in the EV marketplace and actually do fairly well recently. So that's just great to see, and we were highlighting that in episode 81 overall.
Yeah.
All right. So other things out of those episodes, one thing worth noting was we looked at Apple's earnings on episode 72. That was right before Apple's earnings. And I find it interesting because whenever we do the stock play today, it really is intended to just be a learning experience. We don't know exactly what your portfolio looks like, but we want to take plays from the options playbook, the book that I authored, and try to apply them to specific situations. There's over 40 different plays in the options playbook, and it would be boring to just talk about covered calls or long calls every single time, so we try to mix in some strategies. In that episode, we actually looked at a long call spread, and it had everything to do with earnings, but we decided to pivot off of Apple and talk about Skyworks. And Skyworks is the company that makes the product overall. And I found it real interesting because after Apple's earnings, and they knocked it out of the water like they usually will, which has been the recent trend, I should say. But with that said, Apple actually went down and Skyworks went up after that show. Not saying that we had anything to do with it on the stock play of the day, but it's just interesting to try to feed off of that Apple position because I'm sure it's by far one of the largest holdings here at Ally Invest, and I don't think a lot of people even know the company Skyworks, so it was fun to introduce them to that.
Yeah,
overall.
Skyworks, a semiconductor company, really is, I think they're the largest supplier to Apple.
Yes, they are.
And so, yeah, it's a good way to think about just different investing opportunities. If Apple's one of your favorite stocks and you think it's kind of expensive at whatever point you're looking at it, you can always look at the ecosystem, the suppliers or vendors of a company that play a big role in their success as a way to invest in or play that individual stock too.
And you can say that about EVs also.
Right.
A lot of people are focusing on the big companies like Ford and Tesla and the valuations overall. And GM, we also did a stock play of the day on GM and talked a little bit about that stock and the EV space and what they're doing. So overall, just I guess have an open mind. Look at the industries. Skyworks at that point in time had a much better valuation. As far as Apple was getting a little frothy, if you will, and when companies do get a little frothy in the mega space, in the mega cap space, a lot of times you will see them announce earnings and they just take opportunities to sell off and take some profits. That has happened more than once in general in the mega cap space.
Hey, so, Brian, we're getting some really great commentary in the chat too. Not too many questions yet, but I just want to point out some of the folks that we see here frequently every week are pretty excited and jazzed up about our 100th episode. We got Clinton and Wayne. Clinton says you don't look a day over 99. So congrats on 100. I love that.
Fair enough. That was solid. All right. Well, awesome. Get your questions in, and if you have one episode that maybe that you enjoyed, please let us know. If you have one you didn't enjoy, go ahead. We're ready. We're here, so we're ready to answer any of the questions that you have. So with that said, I'm going to pass it to Lindsey, and I'm going to say, Lindsey, are there any episodes that you liked in general? What are some of your favorites?
Well, I go back and think we started this show right before the pandemic. So we only had a handful of these episodes in person in the studio, and this is actually the first time we're back in the studio, so it is kind of a big deal. 100th episode back together in the studio, but then we went remote just like the rest of the world, right? But before we did that, and I think it was our last episode before going remote, we talked about Home Depot, a positive options trade on Home Depot. Obviously Home Depot and Lowe's, the home improvement trend was a huge trend throughout the pandemic, going into the pandemic, and it just accelerated. Once we were in the pandemic, people were spending a lot more time at home. And I'll never forget, because it was right before the pandemic, Brian and I always chat the Tuesday morning. What should we talk about? What security looks interesting? What's going on? And Brian, what did you say to me?
Well, right. Well, okay. So we just got the news actually on Friday. We actually finished up a big conference, if I recall. Well, we got that news.
Yeah.
And we couldn't even go back to our office and grab our coffee cup or anything. They would not let us back in the office.
Yeah.
So as most people, I think, decided to do, I went to a Home Depot parking lot or a Home Depot store. I was going to start a project.
Parking lot. Where is this going?
And I could not park. I could not park in the parking lot. I have never gone. The Home Depot parking lots are huge, and there just was no place to park. So that made me start thinking about Home Depot and the fact that they determined that they were going to be an essential store, that they would most likely be open. We didn't know for sure.
Yeah.
We didn't know for sure, but most likely they would be open for business overall. And that whole situation is just a little sketchy just in general, but Home Depot was that. I couldn't park, and I said, let's start looking at some valuations on some of these retailers that actually will most likely be open going forward.
Well, in the stock market research space, we call that a channel check. So you go to the store, you check on how business is going and if there's anything on sale and things like that. And so it was a really great call, even though options, we do shorter term trades. We happened to kind of talk about that when the stocks were kind of bottoming, because everything was bottoming at that time. We didn't know that. But moving forward, it was like we already talked about, the trend in home improvement was off to the races. Now, more recently, we've seen Home Depot and Lowe's struggle a little more because people are starting to get ready. Hey, we're in that reopening environment. We're in that return to work environment. So people are going to be spending less time potentially on revamping their homes and doing all these do-it-yourself projects. And so that's been the mentality, along with the market volatility, too, that's been taking these stocks down. They also got kind of expensive, too, in the run-up, as a lot of other parts of the market did. But we recently heard, we got earnings from both of these companies, and it was like the tale of two different worlds. Home Depot, which had historically been the preeminent home improvement retailer, it always was
the golden child.
The golden child. It was always the one you wanted to own out of the two. And they came out and, earnings beat and everything, but margins were weak and the outlook was questionable, and people didn't understand how inflation was going to impact margins going forward, and management just didn't seem as confident as looking forward a couple days later. Lowe's reported, and they just sounded so much more upbeat. Numbers beat, they raised, everything was good in the world for Lowe's. And Lowe's is trading at a lower multiple. It has historically traded at a lower multiple.
It has.
Than
and
Home
that's
Depot.
Worth noting, without a doubt. And then also we had Target come out this week, and they knocked it out of the water too, and they've outperformed recently.
And even Kohl's too was today. They had a pretty good report, not as good as Target, but it was still really good. Brian, all this to say, the worry is about inflation. We started talking about how inflation still is a big underlying concern for many investors, but the consumer is on solid footing. I'm not saying that, all is going to be good forever. Higher inflation certainly has a negative impact on the consumer. We're seeing it in confidence numbers right now, but they are in a much better financial position than they were going into the pandemic. They've been smart about maintaining and managing their emergency funds and getting involved in investing to build for the future and things like that. And so, and then you see numbers like this and you see that the consumer is still spending, even if you just look at personal spending data that came out last week. Spending is higher than inflation, even when you take inflation into consideration. So it's going to be one thing that we definitely have to watch going forward. But what we're hearing from retailers is definitely, it sounds pretty good and pretty positive. By the way, Target raising wages for their customer or for their employees up to potentially $24 an hour too. So
wow, might want to. Maybe I'm in the wrong business.
You can't leave me for Target.
All right. Okay. So we're getting a little long-winded. I'm seeing some questions in the chat box now. I do have a favorite. I have a favorite.
What is your favorite?
Well, also I want to mention, first of all, Home Depot. That was on March 23rd.
Yeah.
So I'll leave it to you if you want to go look at the chart, what happened after March 23rd of 2020. And that was our 9th episode, like I said. And we had to figure it out. We had to figure out how we were going to do this from home. That was one of the big things that was going along with it. And with that said, I'm going to talk about a more recent trade that Just it was a stock play of the day that I did by myself. It was after the big game. We had a lot of people that were talking about crypto because crypto spent a lot of money in advertising during that football game. And this trade didn't do too well, Lindsey. It just didn't overall. A lot of things were happening. We looked at a long call spread in coin. And one thing that I do like to think about, a lot of people talk about crypto, but the exchanges that trade crypto, we've always found a little bit interesting in that they actually have earnings. They actually have...
It's a different way to play the crypto
space.
Yeah.
Right.
But yeah.
And even if the cryptos were no longer, you would think that these exchanges would find a way to come up with a new product. And Coinbase is one of those exchanges that has one of the better management overall. But it wasn't about the actual stock. It was all about the fact that that cryptos were in the commercial space. A lot of people were talking about them that week. So why not try to ride on the momentum? Right.
Yeah.
Guess what? It went down. It was probably the biggest downturn of any of the stocks that we talked about. We were bullish on it. And my favorite episode is actually the stock play of the day overtime. Wayne, who I do see in the chat box, was asking a little bit during the stock play of the day, that episode.
William.
William. No, that one's William, but Wayne, see that right down below?
Our buddy Wayne.
Right, our buddy Wayne was asking about how we could maybe roll it into the butterfly. And that's usually not a good question because that means that's our hedge. The market goes down, then we got to roll. And on the stock play of the day, it gave us that opportunity to talk about how we would roll into a butterfly. Why? Because the stock had moved down enough. So in that instance, we took a long spread that we paid a couple of dollars for. We rolled it into the butterfly, didn't add any more risk, but took $1 of risk off the table by rolling into the butterfly. So now our maximum loss was, it was about $2 for every 1-by-1 spread. After we rolled into the trade, our maximum risk was $1, and we still had a toe in the water with potential to actually be profitable on that trade. So that was my favorite one. And you can't just talk about a good call on the stock play of the day. You got to talk a little bit about ones that didn't go right. We're not always going to get it right overall.
No one's batting average is 100 here. Sadly, we get close.
Very true.
We try to get close.
Very true.
But that's also why it's super, super important for viewers that watch Stock Play of the Day on Tuesday to tune in on Friday to the overtime show, because that's when Brian makes adjustments to the trade that he talks about on Tuesday to help, hedge.
Yeah, well,
really.
and it's honestly, the ones that go up, there's really not much to adjust. So if I should say go up, on the options we can go up or go down.
Yeah.
But in general, if the markets don't go against you, so the best overtime shows are the situation like Coinbase, and that was by far, that stock moved against us the most that I can remember out of the 100 episodes. And so that made for a good stock of the play of the day overtime.
Well, while you're talking about coin, we did have William ask a question. Do you feel last week's coin will pop back this week? It started at the open but waned.
There you go. Well, and that's where you're at. Now, here's one of the things about Coinbase that doesn't necessarily make a lot of sense, in that if the cryptos are trading heavily, even going down, but there's a lot of volatility, the exchanges still do just fine. The exchanges actually might do better in down markets because usually trading volumes increase. But with that said, Coinbase is considered a cryptocurrency space, so it has a tendency to go along with what the cryptocurrencies are doing. So the cryptos are bouncing back a little bit. Coinbase is bouncing back. Here's what my suggestion would be, William, just to grab your name off of the chat box, is that if you did the hedge, if you rolled into the butterfly, then you just let it ride. There's no more adjustments. I never adjust to trade 3 times. I shouldn't say never. I mean, maybe if I had a 1-year-long option contract, but you don't want to overtrade either. So in our situation, it was a little bit of a shorter term trade. We did a long spread. We made the adjustment. We reduced our risk with the adjustment. So in that instance, you're just kind of playing the hope game. But as long as you stuck to your plan and you take that approach on every type of, and this was obviously a speculative trade, then in the long haul, if you're correct a little bit more than you're not, you should be able to be profitable in option trading. And that's the whole plan with it. You're never going to be 100% right. And so you got to have a plan. You got to stick to it. You got to watch your risk on the downside and let your winners run. That's simple.
It's that simple, guys. Brian makes
it sounds simple when you say it.
When you say it, Brian, it makes it sound everything really simple.
I actually have a fun little anecdote. A good friend of mine that talks about options, he says, I would rather teach options to a 5th grader. And you say, why would you rather? Because they'll listen. You tell an adult that he should do something, or he or she, and they usually come back and say, oh, but the Fibonacci bounced off the Bollinger Band and then, hit the moving average. So why wouldn't I stay in? So that's the biggest thing. You got to be able to make a plan, and you need to stick to it. And do yourself a favor after you're out of the trade. Stop getting quotes on it. Right? Because that's the hardest thing. You stuck to your plan. You did what you should do. You can't go back and say, oh, shoulda, woulda, coulda. The way to be good at option trading is to have a plan and be consistent.
That I would say that's true for stock trading
that is
too.
Also true for
like
stock
you can't look back at the ones you missed, or the ones that really, were poor. Like you got to move forward with your lives, people. Right? Move forward with the money you do have invested.
Yeah, just like we got to move forward with the questions here. So we're getting a little long-winded.
Yeah. So Clinton asked, with the strong international sanctions on Russia and their commodity sales in platinum, palladium, and aluminum, could we expect to see Alcoa go up? And you know what? I just pulled this chart up while Brian was speaking, and it is. That's not it.
That's not it. It starts with an A.
It's not Apple. No, but today they hit a 52-week high. So I do think you're onto something. And this has been a stock that's been moving up. You've seen palladium prices moving up since the conflict really began. So
I'll share the chart.
Yeah, Brian will share the chart. So it's a good-looking chart and a sea of
strong
volatility and a sea of red. So yeah. So I think. You should have gave us a heads up a couple weeks ago.
Daily per dollar short. Story of my life.
But yeah, any thoughts on that, Brian?
Well, yeah, I mean, we got all our ducks in a row. You got the 200. This looks just strong. If you just look at the moving averages overall, you like to see that. It might be a little bit heated up, a little bit overdone relative to where the 200 is to where it's at right there. 80, 200's down around 50, so about 30 points above. Mm-hmm. So it might be a little bit heated at this point in time, but definitely an interesting chart and definitely an interesting space to be in overall.
For sure. What else do we got in the Q&A box? Please. We've got 2 minutes left, so whatever is on your mind, please drop them in the box.
A lot of congratulations. Yes. Appreciate it, William.
Yeah, thank you for that. Just a reminder, too, Brian and I put out a lot more content than just Stock Play of the Day today and the overtime, which you know about for Brian. But if you really are into options, one thing that you can check out is Brian did a small 3-part series called the Options for Rookies course. Mm-hmm. And that's a really great explainer if you're new, especially if you're newer to options, right? To kind of get the 101, 102, and 103 on how to get started with options trading.
Right. It was a little long-winded. They're hour-long sessions. So you can get your coffee, get ready, and pull them up. We're going to put those links in the chat box. We're also going to put the link for all of the educational events that we do at Ally. You can sign up for that email. We'll send you an email every other week, actually. We're not even going to bombard you once a week. And then Lindsey has her own email list for all of her market outlooks. So if we're going to put that in the chat box, what else did we have in the chat box?
And so for my emails, I send an email every Friday called the Weekly Viewpoint. So it's talking about what's going on in the market at that point in time. But then I also quarterly, there you get an outlook. And then in periods of time when the market is really going haywire, I send market volatility alerts midweek just to kind of let you know what's going on. But there's a whole slew of education, even just checking out our blog post, ally.com/do-it-right. There's a ton of financial education on there, everything from personal finance to your auto loan to mortgages to investing and options. So
I see one real good question from Clinton there.
We answered that. Alcoa?
Oh, yeah, that one's Alcoa. Okay, well, this is your last chance. Okay, time is up. Do we have any last questions? And also want to let you know that we always do keep the chat box up on the replays. So if you want to go in and see the links, you can always grab them later. With that said, I think we're going to call it a day. Wow, we rounded that off pretty good.
Yeah.
Right at 12:30. So, real fun 100th episode. Please check out a lot of the episodes that we mentioned. Those are the viewers' top 5 that we talked about, not to mention Lindsey and I's. So with that said, I guess that's going to be it for this episode of the Stock Play Today. Please click subscribe, ring the bell, and we'll see you this Friday. We'll do an overtime episode, but we'll see you this Friday for the Stock Play of the Day.
See ya.